Justin, do you know anybody that is currently bullish on the economy? I don't. In fact, I have been the most bearish person on the US economy for a long time, but I think I have to change my ways. And it's not that I'm bullish by any means. I just don't think I am as bearish as everyone else. And the reason for that is, Justin, I did the sauna test. And if you don't know what that is, you go to your local gym, you go into the sauna, and there's a bunch of guys there, and you ask them, what do you guys think about the economy? And I have done the sauna test with a few different things. I've done it with the stock market, the crypto market, and 100% without fail, whatever the sauna test revealed, the complete opposite happened, because that is almost the pinnacle of human psychology. And what happened when I was in the sauna, asking how the US economy was, and people were saying it's absolutely horrible. We're going to go into the worst devastating recession, depression since human history. And while yes, I do agree to some extent, I think it's already baked into the cake, at least the current economic recession that we may see. And I know what I used to do when I would trade stocks is my human psychology would really get the best of me. And I would, if you haven't seen Steinfeld, I would basically Costanza myself, where whatever I really thought was going to happen, and I would just do the opposite because I knew that if I really wanted to buy something right now, it couldn't be like it would be 100% wrong, and so I'd sell it. And I did that for a while, and it actually worked pretty good. And my gut for the longest time has been saying that the economy is going to complete. So I'm reversing course, and I'm going to give you the reason why we might not crash. And a crash is certainly not imminent. We always talk about the bearish view, but let's actually take a turn for the better. So the first thing that I want to talk about is disinflation and the consumer pockets. So inflation's actually been coming down in your area, Justin, the same as mine. Energy prices are down pretty substantially from their peaks. They're still up over the course. Food has came down a little bit. It's still relatively high, but it's at least on a downward trajectory. And the goods and services that I want are also coming down. Travel is getting more affordable. Pretty much anywhere that I go out, it is not as expensive, as well as the people that got a raise in 2021, 2022, they got a new job, they were making more money, they're still making that same amount of money. And now the prices of goods and services are starting to come down slightly. It's by no means a drastic measure. I mean, they're still extremely high, but they are not, it's not like there's mass layoffs. It's kind of like the real estate market in 2008, where the extremely over leveraged sectors took a humongous hit. I mean, they were down like 67%, but some of the more linear markets, they were only down maybe 5-10%. I think we could see that same thing. Silicon Valley right now and parts of California, I'm sure, are absolutely in the shitter. New York City is probably pretty bad, where these financial hubs are. And in the extreme tech sectors, they're getting mass layoffs. But I do not see a ton of layoffs in the consumer spots yet. I do think businesses will have to shut down, but as of right now, I still see high demand for goods and services. When I go out, I still see a big wait for a lot of these restaurants. I'm still seeing the malls packed, the shopping centers. I don't see. Justin, you've been traveling a lot recently. What have you been seeing on the planes? I mean, haven't they been?
Oh, they're full. They're full. But then again, at Christmas time, you'd expect the planes to be full. So, I guess what I would say, Josh, is it's certainly, I think there's some wisdom in taking a look at anecdotal market sentiment, like, just asking guys or see what people are saying or whatever, right? There's something to that. So I guess I would take a slightly different stance than you would, but I think it's for the same reason. If the market is, so here's the thing that kind of worries me in the back of my mind. Let me frame it by this, Josh. If you walked into, whatever sample you're going to say, and if we are going to go with the wisdom that whatever these people think to be true is not, or whatever they think that is not true is true, and if you were to ask them this question, explain to me the concept of counterparty risk, or say it another way, is a dollar a dollar a dollar? Is it all the same thing? What response would you get?
Yeah, I mean, the coin goes both ways. You could also say that because everyone's bearish, we're most likely going to go down. But I'm just trying to rethink my bear thesis, because I've been extremely bearish, and I've had puts on the NASDAQ for pretty much since the Fed started QT. I've recently lightened up that position, but I just do not know what it's going to take for the next leg lower. The Fed's pretty much done. Rates maybe one or two more, but this is something that I do think is going to potentially add some toughness. thought that we were going to see extreme deflation, if not disinflation, if not deflation, due to the bullwhip effect, which is basically all these jobs came out. Amazon hired a few million people, but now they have to reverse course and cut all these people. But it doesn't seem like they're cutting as fast as I expected. That means I think inflation is going to be a little bit stickier. We might continue to go down to maybe 5-6%, but I think we'll probably stay there. And then that will probably cause the Fed to have to raise rates a little bit more, which could give us the next leg lower, because I do think we will inevitably see that kind of deflation when there's a black swan event or mass layoffs start to happen and a lot of these businesses start to shut down. I just don't know if that is imminent. I do think it is most likely going to be inevitable. My time horizon started to open up a little.
As I said before, I think where we run into trouble as individuals, as a species, as a complex system or whatever, right, is when we anticipate or when we assume something to be a constant and it's really a variable. And depending upon how deep down that constant or that variable that's masquerading as a constant is, and when it changes, kind of like, the greater the disruption when it adjusts back. My guess is that if we look at, in total of everything right now, and if we assume that if all the constants, or I should say, let me use a little certainty. If we assume that all the things that, yes, they could be variables, but for all intents and purposes, they're still probably constants. Just in the sun will still rise in the east and set in the west. Okay, sure, it might happen differently, but probably, no, it's going to be the same thing. Then I would be much more inclined to your point of view. You might be volatile, it might chop around a little bit, but I do think that especially what you noted earlier, the fact that pessimism is already baked into the cake. I think there's definitely some wisdom to it. But at the same time, I also think, and not to get this is very much of a separate video, but one of the things that I started working on last year, and then I've come to have more not confidence, but I've come to devote more mental bandwidth to upstairs, is the idea of how can you manipulate price? That's probably a better way of saying it. Whether you want to send the price up or whether you want to send the price down, how can you do that with essentially paper? And I think conceptually paper is a contra liability for all intents and purposes. So I guess kind of the way I would approach this is that if everything kind of remains status quo, I'd be very much inclined to agree with you. But I also think that I am growing more and more skittish of things that people assume to be constants in. And if that's the case, and that skittishness is what gives me pause. Not so much the fact that I would disagree with you, Josh, in the very narrow scope. But my point is that I think there are things that are beyond, the scope that will come through and have effects that haven't yet been priced in. It's my old example of.
I 100% agree with you, 100%. But you're basically talking about a black swan event, and I'm saying that might not be imminent, and that's kind of what people have been saying for the past 6 to 10 months. And the stock market has kind of reflected that by going straight down. But I'm not sure if that trend is going to continue until we have that next bad news layer to bake into the cake. And when will that happen? I don't know. But until that happens, I do not think we are going to see any drastic changes. And
we concur. Yeah.
But until that happens, I would. Until that happens, I completely agree with you. I just think that might take a little bit longer than people expect. Or, maybe this January, mid January, based upon. So
well, we'll see. We'll see what's going to happen on that front. Yeah, but I think that would be probably the big thing. The as much as annoying as predicting a black, or as impossible as it is to predict a black swan. One of the nice things about it, such that it is that when it happens, there's very little uncertainty that it did happen. So at least you've got that going for it.
Yeah, the last thing I'd like to say is, I would assume anyone watching this is very bearish on the economy, and for good reason. But when you are thinking about these things and trying to trade them in the market, you have to ask yourself, is this already priced into the cake? And if you are seeing this everywhere, if it is your current belief, then I can assure you it is priced into the cake. Could that be substantially worse than everyone imagines? Absolutely. But right now we are priced in a recession, and we have priced in some economic chaos ahead. Thank you, and we'll see you in the next one.